Hey, welcome to the Profit First module. We are going to discuss what the Profit First system is, and you will see that Cake Business School is a certified Profit First organization, and I will talk about that in just a little bit. Okay, first of all, what is Profit First? So, as you can see by the graphic, Profit First is a book. It is also a cash flow management system for small business owners, and it was developed by author Mike Michalowicz, and his mission of his organization is to eradicate entrepreneurial poverty. That is a pretty awesome mission. He has found that many small business owners get stuck in this trap of feeling like they have to work 24/7 and hardly ever get paid, if at all. So that is his mission, and I love that. So the system, one of the coolest things about it is instead of trying to change human behavior, he teaches us how to leverage it. Okay, so the old formula of profit. What is profit? Profit is your sales minus your expenses, right? So you take money from customers, you pay all your bills, and if there's anything left over, that's your profit. Well, Mike thinks there's a better approach, and I happen to agree with him. So instead of looking at sales minus expenses equals your profit, if you wait till something's over with and hope that there's something left, what are the chances? Your chances are greatly decreased. So instead, he suggests and teaches sales minus profit is your expenses. So take your profit first and then pay your bills. That way you don't get left out in the cold. So this is kind of based on, this is a really interesting behavioral law called Parkinson's law. Basically means human behavior dictates that our demand for something expands to meet the supply. I'm going to explain this to you. I'm going to use Mike's example of toothpaste, and then I'm going to use my own example with fondant, so I can show you, bring it around so you can see how it works in a baking business. So think about when you buy a brand new tube of toothpaste. You bring it home and you brush your teeth every morning, every night, and you got this full tube of toothpaste and you slather on a big bead, maybe you slop some on the sink. Who cares? The whole tube is full, you have plenty. You do this every day for a while, then it dwindles and dwindles, and then you get down to the end where you're squeezing and rolling and pushing and try to get toothpaste out of this tube. You forgot to get it at the store. You don't want to go to the store, but you got to brush your teeth, right? So isn't it amazing how long you can make that half or almost empty tube of toothpaste last? Just because your supply is smaller, so you're consuming less. So that is Parkinson's law. On my baking example, I like to decorate my cookies. Instead of using royal icing, I like to use my homemade white chocolate fondant. And I was making some cookies, and I had, I think, like 10 or 12 cookies left. And as I'm looking at my fondant ball and what I have left, I'm thinking, oh my God, I am not going to have enough fondant to finish these cookies. I do not want to go make more fondant. I'm tired. I'm under the gun. I just want to get this done. So what did I do? Like, you know what? I think I can roll it more thin. I'm going to just roll it thinner and thinner until I got all my cookies done with a small bit of fondant to spare. But again, if you think about, I wasn't thinking that at the beginning because I had a whole big ball of fondant. Why worry about it? Until I was faced with, oh my God, there isn't enough. I've got to make it last. Parkinson's law. Okay, another concept that Mike talks about is what he calls bank balance accounting. And so what this means is that many business owners will determine what to spend based on what's in the account, and then profit is an afterthought. So what this means, most businesses will have one main bank account, maybe a second one that's like a savings account, but most of the time, all of your money, all of your sales is going into that account, and then all of your bills are being paid out of that same account. So money in and out, it's one big kind of serving tray. And a lot of times what business owners will do, rather than put aside money and really think intentionally about what they're spending, they may on the fly just log into their bank and say, okay, I got plenty, I can go ahead and cover this bill, rather than, think about breaking it out into all the different things that you need to cover as a business. So Mike teaches to serve from small plates. Think about that one big bank account is like the serving tray. It's got everything in it. And how much easier is it to just pull from there when it's fine, it's full. It's like the full tube of toothpaste. It's the giant ball of fondant. I've got plenty, I don't need to worry about it. But when you get to a small amount, you start being more intentional about it. So Mike teaches in the system, rather than serve yourself from the giant serving tray, hey, let's portion that out onto small plates and then serve ourselves. So this is where the 5 foundational bank accounts in the Profit First system come into play. So your income account, where all the money is going to come in, that's your serving tray. Then you're going to establish 4 other accounts, one for profit, one for owner's pay, one for tax, this is referring to income tax, not sales tax or use tax, and one for operating expenses. So you will have the money go into your income account as normal, and that's your big serving tray. But then what you're going to do is you're going to pre-allocate portions to put into the profit account. You're going to actually move the money, transfer the money from the income account to the profit, income account to the owner's pay, income account to the tax, and income account to the operating expenses. So this is a graphic that is directly from the Profit First book, and this is what small plates and small portions would look like in the context of your money, your business money. So you can see columns A through F, and then we've got the rows for real revenue range, real revenue percentage, and then broken down into profit, owner pay, tax, and operating expenses. So real revenue is defined as your income, so sales, all the money that your customers pay you, less your contractors or subcontractors and materials. It's similar to cost of goods sold. It is not exactly the same thing in a true accounting perspective, but I'll explain exactly what that would be in a baking business. So your revenue is obviously the money your customers pay you to make cakes and desserts. Your materials and subcontractors are going to be, materials would be ingredients to bake the cakes and desserts, any supplies that are consumed when you produce the product. So I'm talking about cake boards, boxes, supports, anything that's going to get used up making the dessert. And then if you had to contract for, say you paid somebody just to come in and help you, say you had a big wedding and you needed a person to just come in to help, that's money that would come out of the income, for that job. So once you subtract the materials and subs from your income, your revenue, that gives you your real revenue. And so you will then take that amount and you're going to portion it out into the smaller plates of the profit account, the owner pay, tax, and operating expense accounts. Now, most of us starting out are going to be in this column A, which is real revenue range of annually 0 to 250,000. So the percentages that Mike has determined based on market research what fiscally healthy businesses operate generally at 5% for profit, 50% for owner's pay, 15% for setting aside for income tax, and then 30% to cover operating expenses. Now, these are what are called target allocation percentages. This is what a fiscally healthy business should be running at. Doesn't mean that's where you're going to be at the beginning, and that's okay. You're going to assess where you are, and then you're going to shoot for this, and this is going to be something that you're going to just make small changes over time to get closer and closer to running a profitable and healthy business. So I say eat dessert first, meaning you are going to first, from your real revenue, you're going to put money aside for your profit. Profit is your reward for taking on the risk of being a business owner. And then your owner pay. You are working. You need to get paid. You don't work for free. So that's why I say take dessert first. Then you're going to make sure you have money set aside to cover your income taxes, and then you're going to pay your operating expenses. Now, if you cannot afford to pay your expenses, if you don't have enough money to pay your expenses, that means that's a huge indicator that something is amiss. Either you can't afford your expenses, or there could be other things that you need to be looking at to get to that fiscally healthy range. Okay, so we talked about the 5 foundational bank accounts where you're going to have your income account and then profit, owner pay, tax, and operating expenses. Here's another thing about human behavior. We're easily tempted. I hate to say it, but we are. So let's say you're putting money aside for profit and tax, and you come up against something and you're like, oh, I really need to pay this expense. Well, I'll just take from my profit account just to cover it this time, or I'll just take from the taxes to cover it this time. I'll put it back. Don't do it. Do not do it. And to stop yourself from doing that, Mike recommends that you set up 2 additional bank accounts at a second bank, somewhere where it's not easy for you to get to. You don't have online banking, you don't have a debit card. These are hold accounts. And what you're going to do is you're going to move your profit and your tax over to that second bank to remove the temptation from borrowing from these accounts to run your business. Okay, I know it might sound complex. It's really not. It's very easy. It's a system. It's repeatable. You're going to do the same thing every month, and once you get into the hang of it, it's a cakewalk. See what I did there? Haha. So the frequency, Mike recommends using the 10-25 rule. So what he means is on the 10th and the 25th of every month, you are going to do your allocations from your income account into the profit, owner pay, tax, and operating expense accounts. So whatever your real revenue was from the range, the time range, the date range, you'll transfer that money on the 10th and on the 25th, and then you'll further move money from your profit and tax accounts over to those second bank accounts to remove the temptation. Then you've been doing this for 3 months. It's the end of the quarter. Guess what? It's time to party. You get to take your profits. So you are going to take your quarterly profit distribution. This is money that you should use to celebrate. I don't care if it's $5 and you buy yourself a latte, or if it's $100 and you wanted a new purse, whatever it is. Celebrate with the money. You should do something to reward yourself for taking on the risk of being a business owner, because it's hard. And this is another thing about human behavior. If you know there's a reward coming and you can look forward to that, it just helps you keep going. And you'll see that this slide says that you're going to distribute and adjust. So you'll take your profit distribution quarterly, but every quarter you're going to look back at how you did, how are your percentages working, is there anything you need to tweak? Maybe you aren't quite at your target allocation percentages yet, so you want to work toward decreasing your expenses so that you can maybe put aside a little more for tax, or whatever the case may be based on your situation. And the last thing is to stick with it. Again, you get in the rhythm of it, and small changes over time are going to give you big results. And again, I am a Profit First certified professional. So if you have additional questions, or if you would like to have a profit assessment done, or if you want more support or more one-on-one coaching about the Profit First system, please reach out, as I love to help other business owners be profitable.